This is your LMAX exchange technical update for Friday, September 15th, 2017. Euro dollar. So the euro has pulled back from recent 2017 and plus 2.5 year highs at 120.93 from last Friday, but the market has thus far been unable to establish below key short-term support at 118.24. It's going to take a daily close below 118.24 to take the immediate pressure off the top side and open the door for a more significant correction down towards next key support at 116.63. But while we hold below, above 118.24 on a close basis, there's risk for continued upside and fresh upside extension beyond 120.93, that high up towards the 123 area, which is the next measured move extension. Sterling dollar. Cable has rallied up to another fresh 2017 high, and the break now exposes a move up towards some key resistance going back to 2016, which comes in around 135. There is risk for the move towards 135, but with daily studies starting to look a little bit extended, any moves up towards 135 should be well capped ahead of some form of a short-term corrective pullback. Ultimately, the market broke out above 27.75 earlier this year, which did force a major shift in the structure, leaving the bias to the top side now, with dips expected to be supported in favor of an eventual push up into the 140 area. But again, for the short term, rallies could be well capped in favor of one more pullback and some more choppy trade before we see a meaningful extension of gains beyond 135. Dollar yen. Dollar yen has raced back up this week, with the market trading all the way back up just through 111. This was after the market had broken down below some key support last week at 108 to trade to a fresh 2017 low at 107.32. At this point, the market would need to establish above 111 to suggest that we're seeing a more significant bullish trend resumption, a range resumption, opening the door for a move back towards the 114 to 115 area. Inability, however, to establish above 111 would put the pressure back on the downside and expose a retest of the 2017 low from last Friday at 107.32. Euro Swiss. Euro Swiss continues to consolidate off its recent 2017 high, which is the highest levels that the market traded up to since January of 2015. The market traded up to as high as 115.39, 115.40 on the 4th of August. This consolidation that we're seeing now is classified as a bullish consolidation, though we could still see setbacks back towards the previous resistance, now turned support area at 112. But again, ultimately, setbacks should be supported in favor of that next big move towards the 120 handle. Aussie dollar. Aussie stalled out after racing up to a fresh 2017 and plus 2-year high at 81.26. The market was unable to establish a daily close above that previous high that had been set at 80.66 going back to the 27th of July. This suggests that the market is a little bit exhausted up here, and we could soon see an acceleration back to the downside. Key support, though, needs to be broken at 78.08 to really force a shift in the structure. Dollar CAD. Dollar CAD continues its minor recovery out from its plus 2-year low at 120.62. The market stalled just shy of that critical psychological barrier at 120 and is looking like it could be in the process of wanting to turn back up for a significant correction to the top side. Look for the market to establish a daily close now back above 124.20 to strengthen the corrective outlook and potentially open the door for a more significant upside extension towards key resistance at 127.80. Kiwi dollar. The New Zealand dollar has been chopping around since collapsing off that plus 2-year high at 75.58. Overall, the pressure now is on the downside, and a break back below 71.32 would open the door for a break below 70 and back towards the 2016 lows in the 68s. SPX 500. The S&P 500 has rallied up to another record high this week, and the market is showing no signs of wanting to reverse just yet. We would need to see a breakdown below 24.17, that's the low going back to the 21st of August at this point, to suggest that the market is finally ready to relent in favor of some form of a bearish structural shift. Gold. Gold has seen a pullback into this week, but the market is very well supported and is expected to find a higher low ahead of the next upside extension towards a retest of the 2016 peak at 13.75. Any setbacks now should be again well supported down into this previous resistance area at around 1300, but overall the structure does remain constructive and a higher low is sought out in favor of that next big push to and potentially beyond 1375.